Hey everyone! Now, you might be wondering, what exactly is an index fund? Great question, let's break it down together. An index fund is a type of mutual fund or exchange-traded fund, or ETF, designed to follow certain preset rules, so that the fund can track a specified basket of underlying investments. Think of it like a music playlist that automatically updates to include the top hits each week. In the financial world, these top hits are usually a selection of stocks or bonds that represent a particular market segment. So why are index funds so popular, especially among investors who are just starting out? Well, the beauty of index funds lies in their simplicity and efficiency. Unlike actively managed funds, where fund managers are constantly buying and selling assets to beat the market, index funds take a more passive approach. They simply mirror the performance of a specific index, like the S&P 500, which tracks the stock performance of 500 large companies in the US. Now, you might think, is it really that simple? Yes, and there's more. One of the biggest advantages of index funds is their cost effectiveness. Since they're passively managed, they typically have lower expense ratios compared to actively managed funds. This means more of your money stays invested and has the potential to grow over time. But here's an important point to remember: investing in index funds isn't about trying to beat the market. It's about keeping up with the market's overall performance, which, historically, has been pretty solid over the long term. This approach is often called buy and hold, and it's about playing the long game. Now, let's talk about diversification. Index funds can be a great tool for diversification, which is a fancy way of saying, don't put all your eggs in one basket. By investing in an index fund, you're essentially buying a small piece of many different assets. This can help reduce your investment risk because your portfolio isn't tied to the fortunes of a single company. So, how do you choose the right index fund for you? Consider your investment goals, risk tolerance, and the time frame for your investment. There's a wide variety of index funds out there, covering different markets, industries, and even countries. It's all about finding the right fit for your own personal financial situation. So, index funds are a straightforward, cost-effective way to invest. They offer a low-maintenance, diversified approach that can be ideal for both new and experienced investors. Remember, the key to successful investing is to stay informed, understand your options, and align your investments with your long-term financial goals.